Economists keep leading us astray, and they have a lot of help from the willfully gullible. Political scholar and critic Kevin Phillips has for decades been calling attention to the scandalously transparent veneer of the emperor's new clothes.
The Black Swan theory is that with mathematical finance, you have all these people that are the great experts, that nothing can go wrong. And that because a black swan cannot occur, the idea is that it's a useful thing to name these things that can't occur but do when the mathematical financiers get going as black swans. Now, they have been breeding, I would say, 3 or 4 black swans a decade now. And we've seen these things that have to be bailed out. And
things like?
Oh, you go back, I put a list in the book. I never remember all of them when I have to give the spiel, but you start with the Latin American bonds that were failing in the early 80s. Then you go to the S&L bailout. Then you go to junk bonds. Then you wind up, they bailed out Citigroup, which was then called Citibank, because a bunch of the big banks in the late 80s and early 90s got too far into commercial real estate. Then they bailed out the Mexican peso in 1994. They had the Asian currency and debt crisis and the Russian debt crisis, 1997 and 98, and they bailed out a hedge fund. And then you had Y2K, and they pumped all this money in case all the computers went nuts. And then the housing bubble.
Well, these are
just
all
relentless.
That's what people recognize.
Yeah.
And if those are the black swans, it seems we have a herd of black swans.
It's a new species. Well, you didn't overtly mention long-term capital management, which was the more or less definitive mathematical construct.
Because
it was predicated on Black-Scholes equations, which are sort of the underpinning view of how financial markets work, and everybody was investing because these were true formulations. And the things that happened to long-term capital management could not happen.
well,
And of course they did happen, and we learned apparently nothing.
help me with the willful naivete of looking at something that just doesn't look, feel, smell, seems too good to be true.
Well, that doesn't faze them, because it hasn't mattered for about a quarter of a century if the financial sector got too reckless, because if they were big enough to matter, they were important enough to be bailed out.
Which is back to that pegging one thing in the system that's not going to be let fail.
It's also true that if people in one sector know that one way or another recklessness is going to be abetted by being rescued, then there's no longer any reason not to push the envelope right up as far as you can go.
So you make money, and then they save you so that you can make more money doing reckless things.
You get to the point where even the new innovations are almost automatically reckless. And you reject the cautions that come from the problem with the Black Swan. You had one in 1998, you had more than one. But you also had, in the crash of 1987, there was something called portfolio insurance. There was another one of these whiz-kid type things that couldn't do what it did, but it did it. Yeah. And this is the story. They don't worry, or they haven't worried until 2007, that something might go off the tracks, because somebody's always there to rescue. Now, the amounts involved have gotten so unbelievable at this point that if more things keep going, it's beyond rescue.